Hey everybody, good afternoon. Stephen Weitzel, managing partner here at Reveille Wealth Management. Hope everybody's having a great day today. Today I just want to talk about the idea of things being overbought and oversold in the market and a lot of misconceptions that investors have about what they should be doing with things in their portfolio when they're overbought and oversold. So we're going to look at an example of that today, and we're going to look at a chart of Zoom communications. So everybody's on Zoom these days, and I'm not making any recommendation here to buy or sell the stock, but what I really want to highlight here is this bottom pane where we're looking at the relative strength index, or the RSI. Which is a measure of the stock being either overbought or oversold. And a lot of times we see that investors, when they would look at something like this, or you hear on TV that, oh, this is overbought or it's oversold, and it makes people think immediately, oh, well, if something is overbought, then I need to stay away from it. Or if it's oversold, maybe it's a good time to be getting into it. And I want to address the misconception associated with that, because what we can see here is that simply because something becomes overbought or becomes oversold, it doesn't mean that something is either done going up in price if it's overbought, or done going lower if it's oversold. So let's begin by just discussing this idea of the relative strength index and what that is. There is a mathematical formula behind it, but I like to explain it this way. Imagine that you have 100 informed investors in this particular security, because the RSI is what they call an oscillator. It's something that could only measure something between 0 and 100. And we're going to poll these 100 investors, informed investors, and we're going to ask them one specific question. What do we believe is the direction that this stock is headed going forward? Is it going to be higher or lower? If everybody voted higher, that it was going to be going up, then this reading would be 100, meaning everybody believes that it's going up, and it would be theoretically incredibly overbought. The antithesis of that is if everybody thought it was going down, then it would have an RSI reading of 0. So in the industry, we typically set parameters that anything above a score of a 70, which would suggest that 70 out of these 100 people are voting or positioning that the direction of the stock is going to be higher. Anytime we get above that, we label it to be overbought. And when it would fall beneath 30, where only 30 of the 100 people are voting that it's going to be going higher, we consider that to be oversold. Well, the problem is that, and if we're looking here at this chart of Zoom, that the first time that Zoom registered an overbought reading was in late March of 2020. You'll remember that's when everybody was being sent to work from home, everybody was starting to use Zoom, and the stock was going up, and it started to get overbought. And there are a lot of people at the time that were saying, this is something that maybe you don't want to buy because it's overbought, but notice how much higher the stock would have gone and how it would have sustained these overbought readings for a long period of time. So the simple registering of an overbought reading is not a contrarian signal that, oh, this is something we need to be avoiding, because you have a lot of people that are posturing that the direction of the stock is going to be moving higher. Conversely, the first time that the stock registered as being oversold, where most people were positioning that going forward the stock would be moving lower, would have been in November of 2021. And if that would have been a time where somebody said, listen, this stock has fallen from $600 to $200, so it's already had 2/3 of its value erased, and it's starting to get oversold. Maybe this is a time where we should be stepping in and looking to buy the stock. Well, how would that have worked for you? Well, the stock has continued to fall all the way down to $66 from $200. So it has shed another 60% from that period where it first registered as oversold. So simply a reminder that we can't use these isolated readings of overbought or oversold as a reason to take a position in the market. Now, one thing that I will say as it relates to RSI, and the way that we want to incorporate this type of analysis into our process, is we want to look for changes in that sentiment. We want to look for changes in how many people are voting one way or another when the price is relatively unchanged. So notice that as it relates to the price of Zoom, that when it was peaking in November of 2020, near $600, it had the most extended of its overbought readings, right? But as the stock started to decline, and let's just say that as it got back to the $400 level, that you had far fewer people when the stock was back down at $400 that were voting or wagering that the stock was going to be moving higher again in that binary poll. Is the stock going to be going up or down? That RSI, it never returned back to these overbought readings like it previously had when the stock was hitting $400 before. And so the stock's at the same price, but you have fewer people voting or posturing that the direction of the stock going forward is going to be higher. And what happened? We noticed that the stock was not able to hold those previous levels. It fell substantially. And now, right, that the stock is in and around this $66, $67 level, it's back at the same price that it was before the pandemic. But now, where you used to have maybe 20 people at the low that were voting that the stock was going to be going higher when it was at 100, well, the stock price has come down from there. It's fallen 33% from the time it was at $100 right here. But for some reason, you now have 42 people wagering that the direction of the stock is going to be higher. So you have more people believing that the future trajectory of the stock is going to be up than you did back here. Those are the types of divergences that you might want to look for. So just an interesting way to look at the relative strength index, how we can incorporate it into our process, and also as a reminder to investors out there that simply because we hear that an index or a security has become overbought or oversold, it doesn't necessarily dictate that we need to take the other side. We need to take in the fullness of the information that we're seeing in the market, make sure that we're aligned with those trends so we can fully participate to the upside, and we can avoid as much of the market downside as possible. Hope this has been helpful. If you'd like to have a more in-depth conversation around relative strength and areas of the market being overbought or oversold, feel free to reach out to us at info@reveillewealth.com. We'll look forward to talking to you soon. Thanks.